Hey, thanks for joining me again. It's Adam here, and today I'm going to be talking to you about cap rate, the capitalization rate. And the cap rate is a number that is incredibly important in real estate investing, particularly for a sponsor, because it defines or can define the value of a building. And the way that it's calculated is by taking the net operating income and dividing that by the cost of the building. So if a sponsor buys a building, let's say, for $1 million, and the NOI coming off that building, the cash flow coming off that building is $50,000, then that sponsor will have paid a 5% cap rate to buy the building, right? They're going to be getting a 5% return on their $1 million investment. So let's take a quick look at the Small Change website over here, and we will go to completed projects and we'll scan down to Benning right here. Click on Benning and we'll scan down to the sponsors' comments over here. Here they are saying that in year 5, they're going to be selling at a 6% cap rate. All right, so the way that the sponsor in this case is using the concept or the term cap rate is to determine a value upon exiting the project in 5 years' time. So they are assuming that investors, somebody who wants to buy the building, is going to want a 6% return on their investment. So that would mean that if the price of the building was $1 million, that investors would be looking for a $60,000 income per year against that $1 million of investment. Now, of course, if the cap rate is different in 5 years' time, let's say the cap rate is 3%, right? What would that mean? Correct. It would mean that prices have gone up, wouldn't it? Because investors in 5 years' time, if they only want a 3% return on their money, that would mean a building delivering $60,000 of income would be worth $2 million. So the investor is going to spend $2 million in order to earn that $60,000 of NOI, of cash flow at a 3% cap. So let me show you this chart. Here, this chart is from the National Association of Realtors, and what it's showing is how cap rates change over time. So this is from 2010 or so, all the way through to 2016, and it's showing how cap rates are coming down for office, industrial, retail, multifamily, and hotel during this period of time. And so what is that telling you about pricing? Correct, right? It's telling you that prices are going up. Cap rates are being compressed. People are accepting a lower return on their investment. And that means that they are willing to pay more for a building, right? So that's the concept of cap rate. If you want to know more about that in detail, go to leadersofthecrowd.com/small change, where I'll give you access to a very advanced course so that you can understand everything that you need to when looking at any deal in real estate. Thanks so much for joining me today. Look forward to seeing you in the next video.